Rule number 1, never lose money. Rule number 2, never forget rule no. Explanation: protecting your principal investment should be the first priority. Even if you don't earn much, avoiding a loss will put you ahead in the long run. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Explanation: prioritize quality over price. A great business bought at a reasonable price can yield excellent long-term returns. Our favorite holding period is forever. Explanation: Buffett advocates for a long-term investment approach. If you believe in a company's fundamentals, it's often best to hold on to it for a very long time. If you don't find a way to make money while you sleep, you will work until you die. Explanation: building passive income streams, such as investments, is vital for achieving financial independence. Price is what you pay. Value is what you get. Explanation: don't confuse a stock's price with its underlying value. A low-priced stock might be overvalued, and a high-priced stock might be a bargain. Someone's sitting in the shade today because someone planted a tree a long time ago. Explanation: the benefits of long-term thinking and planning are immense. Start early and be patient. The stock market is designed to transfer money from the active to the patient. Explanation: active traders often underperform the market, while patient, long-term investors tend to reap the rewards. If you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. Explanation: short-term trading can be speculative and uncertain. Look for companies you believe will thrive in the long run. Risk comes from not knowing what you're doing. Explanation: educate yourself. Ignorance in investing can lead to significant losses. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Explanation: guard your reputation jealously. A good reputation can be a huge asset, but it's easily lost. Diversification is protection against ignorance. It makes little sense if you know what you are doing. Explanation: while diversification can safeguard against losses, if you're confident in your research and understanding, it's okay to concentrate your bets. We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. Explanation: contrarian investing can yield profits. When everyone is selling out of fear, it might be a good time to buy. Conversely, when everyone's buying out of greed, be cautious. Never invest in a business you cannot understand. Explanation: stick to what you know. If you don't understand a business or industry, it's tough to predict its future success. You only have to do a very few things right in your life so long as you don't do too many things wrong. Explanation: focus on making a few good decisions rather than avoiding all mistakes. Success doesn't require perfection. The most important quality for an investor is temperament, not intellect. Explanation: investing requires emotional discipline. It's not just about being smart, it's about staying calm under pressure. Buy companies with strong histories of profitability and with a dominant business franchise. Explanation: companies with a competitive edge and consistent profitability often make for safer and more rewarding investments. Time is the friend of the wonderful company, the enemy of the mediocre. Explanation: great companies will only get better over time, while average ones may struggle. It's better to hang out with people better than you. Pick out associates whose behavior is better than yours, and you'll drift in that direction. Explanation: the company you keep influences your behavior and decisions. Surround yourself with positive, successful influences. The difference between successful people and really successful people is that really successful people say no to almost everything. Explanation: focus is key. Saying no can help you concentrate on what truly matters. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Explanation: when a great investment opportunity arises, take full advantage of it. The most important investment you can make is in yourself. Explanation: continual learning and self-improvement can yield dividends in all areas of life. Chains of habit are too light to be felt until they are too heavy to be broken. Explanation: bad habits form slowly but can be hard to break. Be mindful of the habits you cultivate. Predicting rain doesn't count. Building arcs does. Explanation: preparation and action are more valuable than mere prediction or talk. Honesty is a very expensive gift, don't expect it from cheap people. Explanation: value and trust those who tell you the truth, even when it's hard to hear. The business schools reward difficult complex behavior more than simple behavior, but simple behavior is more effective. Explanation: simple strategies, consistently applied, often yield the best results. Do not save what is left after spending, but spend what is left after saving. Explanation: prioritize saving and investing before spending on non-essentials. You can't make a good deal with a bad person. Explanation: integrity and character are vital. Avoid business dealings with untrustworthy individuals. It's better to hang out with people better than you. Explanation: surrounding yourself with successful, positive influences can elevate your own behavior and mindset. Cash combined with courage in a time of crisis is priceless. Explanation: having cash reserves during downturns can allow you to capitalize on unique opportunities. If past history was all there was to the game, the richest people would be librarians. Explanation: past performance doesn't guarantee future results. Always look forward and think critically about investments.